Hi, Tom Lydon here in Hollywood, Florida at Inside ETFs, here with John Love, President and Chief Executive Officer of USCF. Great seeing you, John.
Good to see you, Tom.
Another great conference, a lot going on in the ETF space.
Absolutely, always a lot going on.
So a lot of advisors are a little concerned about the market being long in the tooth. What can advisors do to diversify? And on the gold side, commodity side, it looks like there's starting to be some flows heading in your direction.
Yeah, I mean, there's definitely been a lot of flows towards gold over, even the last couple of years. There's been periods where it's moved a lot, but I think the diversification angle is starting to be more of a concern for people. We've had this straight up equity market for 10 years. It's gone so long that I think we're starting to ask the question more, is this the time to start diversifying more? And so we're telling people, I think that's always the case. If you look 10 years ago, people were saying this is going to be a lost decade for stocks. It's been a great decade, so bad advice, but this bull market can't go forever, and I think having your portfolio diversified in lots of different asset classes, including commodities, is a smart move.
So supply and demand plays a big role. Gold, I mean, hey, there's demand, more demand than we've seen in a long time, especially emerging markets. Silver as well. When you get into some of the oil issues and trade starts to come together, greater demand there as well. I mean, how much does trade affect global demand?
It affects it, when we've had these disruptions, obviously, and 2018 commodities, the first half of 2018, commodities were roaring back.
Yeah.
We had the trade war interfere. We just got to the phase one trade deal.
Yeah.
And that's a little boost. We still have more, a little more ways to go. There's still tariffs in place. But just a couple days after the phase one trade deal is signed, we have the coronavirus erupt and become a big factor in the market. So there's some concern about demand on that side. I think if we really step back and look at it, the amount of demand that's going to be impacted, it's meaningful, but it's not as big as people are afraid of. So I think right now, some things are moving today in a positive direction, and we'll see some ups and downs. But the market's pulled back over the last week or so.
Yeah.
If commodity markets continue doing that, I think it's going to be a short-lived thing, and I think there's a lot of opportunity here that we're potentially looking at a kind of recovery. A lot of commodities at low prices, and if they're going even lower right now, there may be some good options.
So we have advisors here that have long-term buy and hold strategies, where obviously diversification makes a lot of sense. A lot of tactical advisors, and you're agnostic. You're not sure or care really what type of advisor comes in, but if they have trading models and we see some uptrends, they're welcome, right?
Absolutely. Well, I mean, we've got products that people can use tactically, like USO. We've got a copper fund, CPER. In fact, you can look at those right now. USO is in what's called backwardation, and we won't go into that right now. But if people don't know what it is, look it up. That's actually a positive. So USO, there's some potential there. Copper, there's some potential, but those are single commodities. So you do want to be very cognizant of what's going on. Broad commodities, I think that's your long-term allocation, where you can just get into that and have that be a permanent part of your portfolio.
Absolutely. John, as always, great seeing you. Thanks.
Good to see you, Tom. Thank you.